All right, we're good to go. Let's do it.
Good to go.
Hello, everyone, and welcome to the show. My name is Chris Alaimo.
And I'm Ben Gassaway. Together, we are the Amateur Investors.
This podcast is our open source journal of everything we learn about investing and wealth management.
We're here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path toward financial independence and financial literacy. Our mission is to build us up from amateurs to experts.
All suggestions are our own, and we recommend that you do your own research before taking any investment advice. See you in this week's episode. We hope you enjoy it.
Hey, welcome back, everyone. This is part 2 of the bull versus bear case for Tesla. And last week's episode, we talked through, some of the bullish factors for the stock. But today, we're going to rip it apart. So, Chris, let's talk bear case.
All right. So like I said, I said in the bullish case, but I just got to say a little caveat in the beginning. I'm not betting against Elon Musk. But I do have some concerns about the price of Tesla, where it is and where it could potentially go in the future. So with that being said, just from a pure valuation metric, Tesla's sitting over 1,000 PE ratio, price to earnings ratio. And that's the time of the recording of this. We're recording on April 11th, 2021. At the peak when they were trading around $880, $860, somewhere in that 850 range, the stock was trading at a PE ratio of over 1,200. Just then from Warren Buffett classic, value investing. I know that kind of is dead based on these super low interest rates and just, the crazy tech stock evaluations. If you think about it, he was always looking for companies with a PE ratio to 10 or less. And Tesla's at 1,000. To say that they
1081, Chris.
To say that their future price is priced in would be a complete understatement. I guess anything to expand on that alone, Ben?
No, I really struggle with that, honestly, because that is the one of many red herrings that really bothers me about the tech sector and a lot of the valuations of some of these companies. I guess I'll name one. We can always censor it if not. But like in Netflix, it's like, why are you trading at like a PE of like 700? What are you doing next? Like, unless you're going to do like Jimmy Neutron immersion into games, like I don't really care if you have friends come back on, because it's not going to grow you 700 times into that valuation. So yes, the PE it's concerning. Truly, it really is.
Yeah, and that's so. I don't know if many people know the story. Back in 2018, I think I bought 10 shares at $150 a pop pre-split. Had I held on to those, so basically what happened was it was trading at $150 is when I got in. It was kind of going up and down, about 175, went down to 100, what is up to 125, up to 150. I held on to it through that. By 2019 or 2020, no, I think 2019, it started to go up. And then that's when it really started to go nuts. It went, and I was setting stop losses on my stocks. So basically I would set it 5% or 4% below whatever the price was. So, just simple math. If a stock's trading at $100, I set it 5% below. I'd set it at $95. If it fell below that, I would sell it off. But anyway, so it was at 150. It went up to 220. And then I set it, a stop loss at 200, let's just say. Then all of a sudden it kept running up. It ran up to, 360. And then I set a stop loss at, 300. Then it ran up to 400. Then it ran all the way up to $900 pre-split. So this is, right now it's trading at $600 with this pre-split. It went up to 900. I set my stop loss at like 850. The stock ended up falling from 900 down to 815 in like a day. So it sold off all of my position. I took my earnings. I made from 815 the difference to 150, and I was very happy. I 4x my money there basically, or 4x my money there, or more than 4x, 5x my money there. Very happy. Took my profits. Had I held on though, it ran up, and pre-split evaluation, it would be trading at like 20, I'm trying to think, 650 times 5 is what? Let me just do back the
3,000 something. Wait.
650 right now. Let's just say times 10. That's not right. 650 times 5 times 10. Yeah, I would have had $32,500 instead of, you know, the amount of money that I got out of it. I mean, I guess I got a good 10 grand out of it, but I'd be 3x that. So like I said, what really scared me out. So, you know, we always talk about the show on buying stocks, but a lot of times we talk about selling. So I had 5x my money. And the thing that really scared me out of stock was just watching that PE ratio, you know, just start to skyrocket up into the 100, 200, 300 range probably is right when I sold it. And then little did I know, you know, the interest rates were going to drop, you know, Tesla was going to go through the roof. We're going to have this black swan event of, you know, the pandemic, which, you know, further drove stocks through the roof. So, you know, I guess Warren Buffett always says our favorite holding period is forever. So maybe I should have kept that in mind. But just I got scared out of stock because of just evaluations alone.
Yeah, which is valid, right? Like just a disclaimer, like I'm still an owner of Tesla, and it's going to be difficult to get me to sell, honestly. Chris, you got to get your lawyer cap on and try and beat me in this bull versus bear case. But I really do believe in the company. And I think that a lot of people are undervaluing the potential growth that if he hits the fully self-driving component, I just feel like the sky's the limit for that. But with really any investment, like if you're not comfortable with the valuation to the point where you're at 1,000 PE, you shouldn't lose sleep at night for making the decision to sell. Like,
yeah,
that's you're playing with house money, but if you have the money, it's your money. So, you know, you do have to be careful. You have to protect your principal. If you want exposure to the company because you believe in it, but don't want to lose money, you know, an option is always to sell half or something like that. Get comfortable with the number. You never want to be impacting your mental health. And Chris, honestly, you made a good decision. Like if you're not comfortable with it, it's not worth stressing out over it. It's really not.
And I made 5x my money. Yeah, I had to pay taxes on it, but you know, I took my money. I made a ton of money on it. I paid my taxes on the gains, and you know, I'm very happy with it. You know, had I known it was going to go to the price that it was, of course I'd held on. But you know, that's the game you play in investing. You know, if I knew the price of all the stocks, I'd know when to sell and when to buy. So, you know, if I had that magical gift, I'd have a lot more money than what I do currently have now. I guess another bearish point. So while we do talk and hype up, you know, Elon Musk, never bet against him. The one thing that I will say is, and this is kind of not a cheap shot. I mean, Tesla is so big of a company. I don't know how many employees they have, Ben, if you want to look that up right now, because I forgot to look up that. But, you know, I kind of see them as a one-man company. And that's, you know, very unfair to say, you know, about any company. You know, there's brilliant engineers. They have brilliant people in finance. You know, the master of coin or the new CFO title. You know, they have got a really brilliant people there. But I really see, you know, the market's going to get, if Tesla or if Elon says, you know, 2024, I'm taking the first trip to Mars and I'm not coming back. If you don't think that's going to drop the price of Tesla, I don't know what you're thinking. Yeah, Ben just pulled up. There's 71,000 employees of Tesla, and I'm sure more than, you know, a good majority of them are, you know, great employees, brilliant people from all ends, you know, whether they're engineers in the finance sector, in HR, whatever they do. I mean, they're one of the top companies in the Fortune 500 company, top companies in the S&P 500 index right now for that reason. You know, their evaluations may be crazy, but people love their product. You know, people are dying to get in the door to work there. So it makes a lot of sense. But if Elon were to leave, you know, for his SpaceX exploration, or even, you know, God forbid his health were to come into question, or something were to happen, if he were to leave the company, I think it would lose a lot of its direction and a lot of its guidance for what it's done, basically.
Yeah. And to the point about just like there being 71,000 employees, like they are brilliant people. Like they are absolutely brilliant people. Like it is such a cutthroat work environment that it's like you could get up and move to the factory, and like if you're not performing up to expectations, like they'll fire you just like immediately. Like it doesn't matter. They are absolutely cutthroat. Like you will be working till 4 a.m. Whatever Elon Musk does, he expects of his employees, which I think is like sort of like an inhumane work culture, but at the same time,
it is a little harsh, especially when, you know, he's the owner. You know, he gets, you know, it's hard to get someone to love your company as much as what you own, basically.
Right. And they're not owners, but at the same time, it builds this culture that like we are going to win, we are going to disrupt the world for the better is their goal. Like that's at least their intention. So in order to sort of break bounds and do the impossible, you know, you kind of have to work under impossible conditions. That being said, there's a fair point that like, you know, people talked about like Apple had brilliant employees, still has brilliant employees. When Steve Jobs died, like Apple went into a lull. That's for sure. Same thing for Microsoft as well. I think especially for Microsoft after Bill Gates left, like Microsoft was falling behind. They tried to make mobile phones, like video games weren't performing.
A
They
bunch
weren't in
of
the
poor
cloud.
acquisitions. They did a bunch of companies that they bought that they were thought were going to be profitable, and then they just kind of killed them and sold them
Yeah.
off again and stuff. So
So
yeah,
losing Elon Musk, there could be a situation there where it's like a lost decade or something. Like Tesla may still have big opportunities, but losing Elon would be very big for sure.
yeah, and I don't see it as unrealistic with a lot of his aspirations for space exploration and going to Mars. I'm not saying by 2024 he's going to go there, but when you're running SpaceX and you're talking about recolonizing Mars, push comes to shove, that might be one of his bigger aspirations than building Tesla here.
It is.
I know. So I kind of going off that, stretched too thin. I mean, right now, Elon is still on the board of PayPal, I believe. I don't know if he gave up his board seat at PayPal. I think he's still there. He runs SpaceX. Now obviously he, delegates his duties to someone else. I forget the CEO of SpaceX. He also helps run Boring Company. He also is running Tesla. Elon Musk, until he develops time travel, which he's brilliant and might do, he's still bound to 24 hours like you and me, Ben, and like everyone else on this planet. I know he's kind of falls in the camp like me that he can live off 6 hours of sleep, 5 hours of sleep, sleeps at the plant, doesn't lose time traveling back and forth. He is brilliant in that regard, or, crazy or a madman, whatever the way you want to look at it, but he's still bound by 24 hours. And I think, that comes to a health concern. He has a family, he's got a bunch of kids, he's got a few ex-wives and a current wife. So, there's so much time that, they demand from him. And I get it that, when you run a company like that, there's sacrifices you have to make. If you're the CEO, founder, if you're on a board, there's sacrifices you have to make in any position, whether you're, the founder or anyone's life, you have to make sacrifices. And I just think he's just stretched very thin for what he does and how brilliant he is, basically.
Yeah, that's a good point.
And then I think the last point that I'll talk about, and then we can get into it, is Tesla is benefiting along from other corporations, or a lot of the big corporations, from these crazy low interest rate environments. I mean, we always talk about, can you get any lower? And people have been saying that for years, but I mean, we're hovering around the 10-year treasury is at 1.5, 1.6.
Maybe, yeah.
I haven't looked in a while, but I mean, even before that, I mean, the Fed is keeping things at, 1%, 0%, the only place we can go is negative. And there's countries that do that. And yeah, it's even greater for stocks and stuff like that. But that's kind of when you start to get into hyperinflation. We're already starting to see inflation due to, steel, wheat, corn, various different things, food, all these different things. And aside from that, so keeping interest rates low, I know Jerome Powell keeps, reflecting and saying by 2023, that's how long he's going to keep them. If things start to get crazy, they'll bring up interest rates. But not even that. Aside from keeping these interest rates really low, we're dumping money into the economy in the form of stimulus checks. We've had 3, potentially another one with the infrastructure deal with Biden, which is, I think, a $3 trillion stimulus.
$3 trillion. It's going to be in our newsletter.
Yeah, it'll be in our newsletter. So, a big infrastructure package there, and then potentially even a 5th stimulus package on top of that to help people. We're starting to see inflation with, wood, metal, construction materials. Newsflash, I know we talked about in the Bull episode, or the Bullish case, they're building gigafactories. And it's getting to the point now where vendors, I'm seeing this, they used to give 30-day or 60-day quotes for, buy X amount of steel, lumber, whatever it is. They're now changing it to week-long quotes. If you're trying to build a gigafactory and you have to make a decision in 7 days, and if you don't, by the way, the new quote we're going to give you is probably going to be much higher than the one that we just gave you. That doesn't make building a gigafactory any cheaper. Obviously, if they've got the benefit of bulk ordering, like, okay, we're going to look at this, we're going to bulk order to try and save money. But with prices fluctuating, going so crazy, coin shortages across the United States, obviously that's coin shortages because there's metal shortages. So that doesn't help when you're trying to build like these multiple factories across multiple continents. Yeah. So I just see that as an issue, and it's a cost of capital. So not only their evaluation's getting higher, their expenses are getting higher in turn by all of this happening. So yeah, those are kind of my big points, Ben. You got anything else to add there?
I'll walk through some of my points, which you have a pretty involved analysis on the bear case. I really think that your point on the cost of capital and of construction is huge. And it's something that I honestly just like not necessarily scoffed at, but totally overlooked, because I've talked to some of my like friends and family who are like trying to do like home remodeling, and they're like the same thing that you said, trying to buy a door. You've got to get or like a door installation for even service, like on the retail side of just like, you know, service companies. They're like, well, this quote is only available for a week or 2 weeks. And normally you can just kind of punt it off for a few months, and you come back and the quote's about the same. Prices are skyrocketing. And although you maybe can pass through the costs to the consumer, in terms of just like raising the car price, that's one thing that they can do. Like as the Fed's adjusting interest rates, they have the lever to change the car price. But it's not like Amazon where you can kind of just like change the price of Band-Aids overnight really quickly. Like buying a car, that doesn't move as fast as sort of just like consumer products. That's hard to
Exactly.
pass through.
Exactly.
So that's a real risk, which is going to be faced, I guess, really to any sort of like manufacturing industrial space. So it's not unique to Tesla, but because they're so dependent on growth, it is kind of unique to Tesla because their growth targets are just like through the roof, and they don't just have assets that they're pumping out new lines of cars. They're trying to make the lines
Yeah.
to build these cars. So Chris, I think that's the main point that popped out to me.
Yeah.
Like the Elon Musk thing, like I feel like they have just like such a strong brand stickiness that they could probably hold their current line for the next 10 years. If they get fully self-driving out, I think the engineers just need to play with that, because that's been the thesis for so long, is this autonomous ride hailing. If Elon Musk sticks it out for that, Tesla's valuation, I think it still has opportunity to grow. And I think they can run it without Elon. So
Yeah. And I think this is just me. I don't want to come off as a conspiracy theorist here. So this is just adding a little nuance to it
you
as well.
can.
I'll be a little bit conspiracy theorist. So I think we're already seeing, and adding on to the inflation aspect, I already think we're starting to see hyperinflation. And people are like, oh, they're not. Like, I mean, half the country's still locked down. We're still, divvying out vaccines for, the different types of vaccines. We're opening up the country slowly. But a lot of people their savings are higher than ever, which is, counterintuitive to, oh, we're in a pandemic. A lot of people lost their jobs. I get, but with these stimulus checks, with all these different things, there's been a lot of people that, I mean, I haven't been on a plane. I haven't traveled outside of driving somewhere in over a year. And, I was planning to go on a cruise. That obviously can't happen during a pandemic. I was planning to go to Germany. I think there's a pent up, like, it's like a spring. We've condensed all this demand, like the demand keeps getting higher and the tension keeps getting more, that when the economy and when things fully open, the only way to compensate the demand, simple supply and demand curve, demand's going to be so high and the supply is limited, for obviously they'll be open up more flights, more cruises, all these different things. The only way to be able to meet the demand though, is to, raise the cost of things. And we're just going to see inflation go through the roof. If all these wood, steel, all these prices are going crazy now and people aren't going out doing things, I think it's only going to get worse. And I know Jerome Powell's like, oh, that's not true. People are doing home remodeling because they're home now. So that's why things are higher. I'm like, well, when we start opening things up, there's going to be more demand for, oh, I can get a new car now. I want to travel. I've been using the same old beater, but now I need to start going back to work, or all these different things. So that's kind of my conspiracy theory. I think we're already seeing hyperinflation. I think it's only going to get worse as the global economy and the U.S. economy starts opening back up.
Yeah, I mean, I wouldn't even call it a conspiracy. I feel like that's just a macro outlook. I think we're just like, there is, I feel like, some indication here, just looking at just like the consumer price index, the CPI, and also just like the there's another price index.
The Chapwood Index?
Not what I'm thinking, but yes. Up. I mean, just like the prices are going up, and like whether this trend breaks or not, I don't know. But just with the amount of money that's inflation, and just to your point, Chris, about the thesis that money is just like locked up in dead savings accounts. I don't know what that does, because the demand will be allocated how it will. And those markets that need to have the supply probably won't be ready for it, because businesses are shuttering, and even, and we're going to talk about this in our newsletter, but the Fed Powell, he talked about that. He's feeling optimistic about just, I know we're digressing, but he's feeling optimistic about the U.S. economy. The recovery has been faster than expected. Vaccine rollout has been faster than expected, which is still not fast enough. I still think they should have done first dose to everyone, then second dose for priority individuals. I think they screwed it up. Anyway, But he did mention that there are indications that hiring is increasing, but there's also this duality where like there's still a ton of unemployment cases. Like last week, there was 744,000 folks that filed first-time unemployment. There's businesses that went out of business forever. I mean, there's so much loss of business, so much loss of jobs that like no matter how much the economy is growing, whatever you want to call the economy, the Amazon stock is going up. Of course it is. Businesses are closing, and I don't know what that does to the US. I think when we come out of COVID, whenever that may happen, I think in the next few years is going to be a very, very revealing opportunity, not opportunity, a revealing experience for the true US economy to see how these major disruptions to like our way of life globally will play out. So Chris, to your point, we may be on the precipice of just total collapse. I don't know, but the numbers are scary. Valuation side of things from like a Schiller PE, the Warren Buffett indicator, it's all crazy high. Prices are high. Asset prices are high. Inflation very much is here. I mean, things are inflated, certainly, against historical norms. So we'll see. We'll see what happens and how that holds with Tesla. So really quick, I want to talk through maybe my top 3 bear points, and then I'll walk through a few of the risk highlights that I read through on the 2020 10K. So I think the first kind of like soft point I want to talk about is increased competition with new entrants into the EV space. In our bull case, Chris and I, Chris brought up whether if Ford slaps a Ford logo onto their EV car, will people want to buy it? Maybe not. Maybe people will, just depending on the price, but Tesla really invests in the user experience and the driver's experience. It's like I think they call it infotainment or something, where they have information and also entertainment in the car. And I think they're building out such a unique driving experience that's so novel from you turn the key on a car. And the one thing that I guess car enthusiasts might really miss is the revving of an engine, but I think we'll get over it when you accelerate faster than a Ferrari. So
yeah,
the increased competition that will exist. There will always be some friction where, a new entrant, if they have a feasible model that has a decent range, a decent offering, it's aesthetically pleasing, that's going to steal some customers from Tesla for sure. Does it mean that they won't go back to Tesla? Not necessarily, but I think it still could pull away from Tesla's dominance or at least market share. But there's nothing that, Google still exists. Despite all of the search engines that have come out, they exist and they still thrive. So I'm not so concerned about competition, but nevertheless, it's a threat that exists. The next 2 are, I think, so monumental to the valuation thesis on Tesla that, one, I think this is the middle tier of absolute critical component of the valuation thesis is if they are unable to grow into their delivery targets. And Elon Musk in Q4 said that going forward, which is a very vague statement, going forward, he expects that they will increase deliveries by 50% year over year from 2020. And that 2020 number is 500,000 deliveries. So, let's see what happens in 2021. But if we're not seeing 750,000 cars, then they got to ramp something up. So that's a bold number. I think that is driving a lot of this, the valuation upward trend for the stock. I think if they can get up to their promised targets, if they can grow by 50% for the next 10 years, oh my gosh. You should just keep buying Tesla until you're not comfortable with it anymore, honestly, because this company is going to blow people away in the markets, honestly, because the fact that the company is trading at its current multiple with just broad assumptions, when those things come to fruition, it's just going to go up another level. Maybe you sell at that point, but I just think that could take it up another notch with the delivery targets. So another more risks built into those delivery targets. I just think with, sort of just like financial uncertainty and sort of like the talking about the inflation of prices for construction materials, I was thinking about permitting and construction delays. I really think that could have a major impact on the ramp schedule for Tesla, especially when you're struggling with a budgetary standpoint of you can only forecast out a week, Chris, you said? That's crazy. Like
Yeah.
how do you build a budget around cost estimates that might go up by like 20-30% or more or less, I guess, from week to week? I think that's ridiculous, and it's almost impossible to make a budget.
I think their procurement department is going to have a really tough time. The way that I could see them combating it is, hey, we're going to put an order for 1,000,000 pounds of lumber or however much steel, lumber, whatever they need to build a gigafactory, and they say we're going to put in this order now, and or maybe they'll even bump up the amount they think they need by 5%, 10%. So yeah, it'll be more expensive, but they'll try and get a bulk pricing for all of that. And then if God forbid they have extra, they can either send it to one of the other gigafactories they're building, or in the worst case scenario, they could actually sell some of the stuff at the inflated prices that they have.
Yeah, and I don't know. I mean, I wouldn't know how feasible that is, depending on what the manufacturer's limitations are. But I think that's a reasonable thing to do. That you're basically just hedging a futures contract with commodities.
Yeah, pretty much.
Which is real. So I think that can be worked around. But I think the major issue on the inability to grow into these delivery targets is, do you have enough gigafactories? Plain and simple. If there's not enough factories, you can't make cars. Like, there's no way that they're just going to come out of the ether and exist. They need to literally have the infrastructure to grow these cars, create these cars on a manufacturing line. And the gigafactory schedule, like we talked about in the bulk case, with really, really kind of generous assumptions that by 2025, they're going to have a full ramp schedule of 4 million cars with all the potential gigafactories. And I just think that's a really bold assumption, and I don't know if they'll get there within that time frame. They'll get there, but I just don't know about that time frame. Third, I think this is the biggest, the single biggest item that will either take Tesla to the stratosphere, or it will absolutely just give Tesla a 50% haircut over the next few years, is that the fully self-driving feature, the FSD, never comes into fruition, or in a less sort of like catastrophic case, it's notably delayed. If that doesn't come to fruition, if like they just can't get, whether it's from a legislative side that you can't have fully autonomous vehicles on the road, that I think is the single easiest pinpoint restriction, is if legislation does not allow it, right? Like, I think there needs to be sort of a legislative favorability towards that technology. And if it doesn't pass, it doesn't pass. Even if you have a perfect technology, if the courts aren't willing to approve it, it doesn't approve. So that's my thought. And then also the technology is not there yet. So I just think there's so many pieces that piece specifically is really what's making me a little bit weary about the valuation of the stock and just like future growth drivers. Like we showed my model and we talked about Cathie Wood's model. If that doesn't come to fruition, I think that the incentives to own a Tesla and to pay that extra, that's they're assuming, well, at least I'm assuming in 2030, that's $100 billion in net revenue, assuming a $15,000 FSD premium on a car. I don't think it's catastrophic, but it's certainly detrimental to the valuation of the company. And I think that's what's driving a lot of the spikes in the Tesla share price, just because they assume that it's going to work out. I think, in my opinion, a price to earnings ratio of 1,000, you kind of see the future with that price. So I was going to talk about some of the risk highlights, but honestly, I think we talked about most of them. Like, even in Tesla's earnings report, I guess I can look really quickly at some of the things. They even talked about that we face strong competition for our products. That's what they say, that there's a growing list of established and new competitors. So on the ability to grow the business, that's a factor. I'm not as worried about that one. But Chris, to your point, in the 2020 10K, they even said for the risks to their operations, among many things, and you can read this, we can send a link. It's pretty easy to get to it. You just Control F risks. We are highly dependent on the services of Elon Musk, our chief executive officer. I mean, they're not hiding behind it. They say it publicly that we are highly dependent, I guess, on his engineering skills. And it sort of his innovation mindset. But they also talked about just like government and economic incentives and legislative adoption. And then third is, or I guess lastly, they in the risks related to ownership of our common stock, they say, which I think is pretty funny, the trading price of our common stock is likely to continue to be volatile. I think it's like, get ready for the ride. That's what it feels like to me. It feels like sort of looks like SEC joke where it's like, get ready because there's a lot of things that are either going to be good or bad for Tesla, but it is going to be bumpy. So I think that wraps up sort of my points that I wanted to highlight, which is really just kind of a piggyback on your bear case. I think we're pretty aligned on some of the risks here.
Yeah. So Ben, I guess as we get ready to wrap up the episode here, is it a buy? Is it a sell? Is it a hold? Is it a don't buy more, keep what I have? What's your take on it right now?
So personally, I'm still a buyer of Tesla. I am. And the reason being is that I know we walked through some of these wishy-washy, like from the hip assumptions on, pretty aspirational growth targets. I think that the growth potential for Tesla hasn't fully come to fruition in that, like, we haven't had them come out and say fully self-driving is never going to happen. They are still building gigafactories. I feel like when I start to see a plateau in the manufacturing of manufacturing facilities, or some detrimental case about fully self-driving comes out that overrides the thesis of that, I think there's still a lot of uncertainty that builds upside to the stock. Do I think that the stock is overvalued based on current numbers? Absolutely. Absolutely. Like, if we're looking at the discounted cash flow model of real numbers, like, it is exorbitantly overvalued, truly. But if I extrapolate some of the current, like, free cash flow numbers out into a reasonable sense, you get around a 9% return. To me, assuming that they're going to continue to be profitable going forward, I'm an owner of the stock. I'm not overweight Tesla. I'm going to maintain exposure to Tesla, but I'm going to keep it in control because of the risks associated with the business. But for me, in how much conviction I have for the product, how much I have for Elon Musk, like, I can't afford to be out of the business. I've been a shareholder of Tesla for a long time, and I'll continue to be, and I'll continue to buy, honestly. Like, I continue to buy Tesla. So that is my case. Take it how you may.
Yeah.
How
So
about you, Chris?
I got kind of the boring answer. So I am not a buyer or well, I don't have any of the stock to sell, but I'm not a buyer. I don't hold any in my personal taxable account. I guess I am a buyer. So I guess I'll caveat that. I believe in Elon. I believe Tesla stock will go up. I'm just going to keep buying it through basically broad index funds. And I know that's kind of the boring answer. So I guess it's kind of two factors, the two that come in. I'm in the process of closing on a house in the coming week. So I just had to put a lot of capital towards that, and I didn't have free money to buy there. And then also, when you're looking to buy things, you're foregoing buying other companies, stocks, real estate, whatever it may be. Right now, I just don't see it as the best investment. So right now I'm investing in real estate, obviously, and then I'm investing into Bitcoin. So I think just Bitcoin is your better bet in the stock market. With that being said, I'm still buying into my company 401k match and my Roth IRA and stuff. I've just decided to take more of a broad approach across the market, and that's I did very well in 2020 with individual stock picking and all that. I just have, I guess, this fear of I don't want to pick any individual stocks right now because I just feel everything across the board is overpriced. And I think there's room to go while they keep interest rates so low. But I'm kind of, aside from putting money into my house and buying into Bitcoin and doing all this, I'm going to wait for a massive correction. When interest rates do go up, if it's 2021 this year or 2022, because they need to combat inflation, or 2023, where Jerome Powell keeps saying, I'm going to start putting money on my nest egg or, investing account. And I'm going to wait for a gigantic correction, or I don't want to say depression. I hope we don't have a gigantic recession or depression, which is ironic because we do kind of have one right now. The stock market's not showing it, but the normal economy is showing that. So I'm going to put money on the sideline, or put money into Bitcoin, or put money into the house. And then when there's a massive correction, that's when I'm going to buy up, kind of like a Warren Buffett mentality of like, yeah, I have cash on the side that's kind of melting away. But, when the opportunity arises, that's when I'm going to pounce and buy into a lot of things.
Yeah, that's kind of where I'm at too, honestly. Like, when I say I'm a buyer of Tesla, I buy it when it crashes at this point, because I do have exposure on it. And I'm really struggling, like you said, Chris, with valuations on businesses. I'm not selling, like, I'm certainly not liquidating positions. I still have a pretty strong exposure to equities with my Bitcoin position growing. But I still think there's a lot of businesses out there with opportunity for sure. And that's just my take. I feel like I've I bleed stocks. So I am obviously invested in a lot of things. And you've probably seen that in the newsletter. Like Chris and I both have a ton of accounts and stuff. Just, it's not like they're big number accounts, but we have a large number of accounts.
Yes.
But I'm looking for opportunities in the market. Really, I'm in a pretty deep holding pattern, trying to build up some cash, like still have to pay bills and live my life. But Tesla's a name that is really attractive to me. I just like the price makes me weary. So I'm really looking for sort of a broader correction as well, Chris, honestly. And Tesla's gonna be one of the names I pick up for sure.
Oh, definitely, for sure.
So is there a price? Is there a price that you buy, like roughly? Like, are you a buyer of Tesla?
Yeah, full disclosure. I almost bought in on March 8th when they dropped below the $600 mark. I was like, ooh, I was like, I could really buy in there. If they fell, and I know it's super volatile, if they fell below 500, I was going to buy in, definitely. And I know that's just kind of like just rough of the number, but like, I'm looking at the market. I'm like, oh, Tesla's below 600 for the first time in a while. I seriously thought about buying in there, but it just didn't fall enough. I was putting money into buying a house, so I just really didn't have the cash on hand to buy in. But you could sell different investments and buy other things. So I thought about it at that point, to be honest.
Valuations are tough right now.
Across the board. And that's nothing against Tesla. I just think the market in general, Warren Buffett's ratio, the Shiller PE ratio, like, you just look at the PE ratios of just the FANG stocks alone, and you're like, this is starting to get a little crazy.
That's for sure. All right, everyone. Well, thank you so much for listening in to this two-parter episode of the bull versus bear case for Tesla. If you like this type of episode, please let us know. Like, we'd love to hear from you. If you enjoyed this, if you have any, thoughts or suggestions, this is a lot of research for Chris and I. So we would love some feedback. All feedback is good feedback, even if it's bad feedback. So
yeah.
This is fun. I just this was an opportunity for me to really dive into a business, and especially a business I wanted to learn more about. So I learned a ton just from doing this episode. So yeah, Chris, thanks for joining me on this. What were your thoughts?
Yeah, no, thanks everyone. Smash the like button on YouTube, rate and review us on our podcast platform, TikTok, LinkedIn, Instagram, Twitter, you name it. We're on all those. You can check out our website as well. Thanks everyone. We'll catch you next week. Have a good one.
Next week.